Welcome back to another update. So nothing much has changed over the last couple of weeks. My last update came out about 13 days back, and since then the market has been relatively stable. We've also tested out the 50 DMA. This is for the chart of Nifty 500. You would see in the market that the structure of Nifty 500 is so different from what you see in mid cap. This is mid cap index, this is mid cap select, this is mid cap 150, this is small cap, and look at the micro cap index. And now look at the overall Nifty 500 index. So as you're moving towards the larger pockets of the market, large caps of the market, that is where the momentum plus price structure is still improving. And that is understandable. That is mainly because of FII is not coming back to our market. Again, this is a point that is being talked about a lot. And quite frankly, I would put out a video next week to help you understand certain things about when FIIs will come back to the market. They will come back to our markets. I'll just explain certain things that will help you understand when. So clearly the SMID space of the market, that is the small cap, mid cap, new age companies, IPO companies, that is where the momentum is there in the market. And this word momentum is essentially important for you to understand. See, broadly in the market, there will be many participants who would come out and talk about value. But essentially, if you look at what people are buying, you will notice a trend that while people talk a lot about value, when the recent quarterly filings are done, majority of market participants essentially chase momentum in the market. All right. So if you look at the division in the market currently, you look at, I'll just open up certain ETF charts. You look at pharma sector, this has formed a beautiful contraction. This is a long-term contraction, almost a 1.5 years kind of a contraction, Mark Minervini contraction that is playing out here. What has done well in the market? Where is the momentum? That is what I'm showing you. This is the capital market index, the health ETF. Again, look at the contraction. Classic Mark Minervini contraction. Capital markets have done so well. You look at the ETFs of capital markets, small cap in general. This is the Motilal Oswal health ETF. Look at it. Beautiful contraction. CPSE ETF. This has been one of the best performing ETFs. Again, look at the long-term contraction while the markets were correcting. EV, infrastructure, again, this is something that has recently done well since March low. I've already spoken about small cap 250, mid cap 150. Power index, this is a grow power ETF. And again, I have to reiterate, this is nothing that I speak as an investment advice. I'm just showing you what is currently happening in the market. It is your money. You have to do the research. Infra, mid and small cap space. So this is the pocket where momentum is. Of course, the metal, the defense sector. You can clearly see the difference. Now, if you look at where value is in the market and why a lot of people are not talking about these pockets, it is not that these pockets are not a pocket that will do well in the future. It will. It is just a matter of time. And time is something that people lack these days. Patience is what people lack these days because they want to see quick money, quick action. So where is value or perceived value? Because value for every participant in the market is very different. Look at the private bank ETF. Do you think a lot of people are buying this? No. Look at the ITBs. The death of our IT sector is being written. All right. Whether it is true or not, time will tell. I don't know about that. That is something that you also have to analyze. Always go back in history and see at which particular time things were so bleak for the IT sector that it had started catching the attention of mainstream media and retail people and also FII people. And then see what happened few years down the line. Because that is what value essentially offers. It offers good buying price today for the prospects of tomorrow. So is AI going to kill our IT industry? Well, I think no, because our IT industry and the stalwarts of our industry, companies of our industry are being criticized today. Rightly so. They have made some bad choices, but it does not mean they cannot correct those choices. All right. You look at FMCG. Who's buying this ETF? You can just see. I mean, these are ETFs that are languishing near 52-week low, all-time lows. Auto Bs again. The two-wheeler auto space is especially buzzing, but the four-wheeler is not. All right. Look at the internet digital. Look at Nifty Bs, the Nifty ETF. All right. So there are plenty of pockets in the market. Bank Bs also that is not doing well. Again, the story about banks is that Indian economy is slowing down, so the credit growth is not going to be great. Banks are going to suffer. Well, let me tell you one thing, and I can certainly be wrong. We'll talk 15 to 18 months down the line. 15 months is a reasonable time frame for any investor, for any long-term participant also. If you're looking for returns over the next 1 month, 45 days, 60 days, then you're going to lose money. It is as simple as that. It's very easy to analyze things on a historic basis, but you need to see what is currently happening in the market. In today's time, the attention mainly is in the mid and small cap space. So for instance, if you look at the large cap banks, they're not doing well. This is the bank Bs. But if you look at the smaller banks and create a custom index of it, you will find that index is somewhere here, very close to all-time high. So in any sector that you want to bet, look in the small and mid cap space. For example, if you look at the pharma Bs, this is a beautiful contraction, but pharma index is dominated by 2 3 names where weight of those particular names skew the sector a lot. All right. So now what you have to do is look at new age pharma companies, look at companies that have exclusive access to some vaccines, look at the market share. It's not that difficult. You can have any AI agent analyze this for you, and then you have to verify that information. But the story, the theme is currently the small, mid, micro cap space. If you don't understand anything, let's say you don't understand any stock, you don't understand how to do bottom up analysis, just stick with ETFs. Is the pharma ETF looking good to you? Do you think prospects are good? Again, please consult your financial advisor and then take a bet. If you don't like sector specific bets in the market, there are so many ETFs. The regulator, that is SEBI, NSE, everybody has to be appreciated for the kind of ETFs that have come in the market. There are broad themes kind of ETFs now. Small cap, there is a complete ETF for this. And many companies have this ETF. You just need to pick and choose based on relative strength or whatever parameters you're using. You look at small cap 250, there is a small cap 250 ETF also. HDFC has a mid cap 150 ETF also. So this is Motilal Oswal's mid cap 100 ETF. So if you don't understand stock picking and you don't want to take help of financial advisors or anybody else, you just can analyze simple chart structures that Stan Weinstein has taught you, Mark Minervini has taught you, William O'Neill has taught you, and then go behind ETFs. Don't go for this short term game. Trust me, whatever is happening today in India, it is from the medium to long term perspective. And yes, I will still tell you that India's story is here to stay. We are looking at things in the very short term, and the commentary that is usually given about India is never going to be great. If you're here in the market in the 2003 2008 cycle, when the greatest of the bull runs was playing out in India, you have access to YouTube. Go to YouTube and listen to whatever people were saying about the Indian growth story. Between 2011 and 2018-19, again, you have access to YouTube. So commentary in general will always be bearish. But look at which are the best performing markets in the world. And I would tell you, do this exercise and look at the data in dollar terms. Why I'm telling you dollar terms? Because these days there is a lot of criticism about India in terms of its performance when it comes to other markets, that other markets have run up so much, but Indian markets have not done well. But as an investor, as a long-term player, you got to look at 5-year return, 10-year return, 15-year return, because that is where wealth is made. You can make 10 odd percent in the next quarter and feel like king of the world, but that is not going to meaningfully impact your wealth. Wealth is always created over long term, and long term is 5 to 10 to 15 years. So you have access to AI agents, you have access to Google. Do a search over 5, 10, 15, 20 years. Has the Indian small cap, mid cap index delivered good returns? And you will find there is only one market that beats India, that is NASDAQ, which is not even the complete US market. NASDAQ, that is the tech sector of India, of US, has beaten Indian small caps and mid caps. I'm not even taking into consideration dividends and those kind of things. All right. And India is a close second. So with this current economic makeup, with the prime minister coming out and warning about certain things, I would still tell you, find me an economy growing currently at whatever rate we are growing with the current macro setup. The macro word always gets me into trouble, but we'll talk 15 months down the line. I think we'll sail through and do very well. Regarding FIIs will come back, and I'll make a case about that in the next week's video, because again, your analysis has to be objective. Your analysis has to be based on historical facts, not on assumptions that are put out on social media and media, because that at times is quite frankly misleading. The choice that you have to make here at this stage is whether you go behind momentum or you go behind perceived value. Why I tell you perceived value? Because if ITBs today is at 30, no one can say whether it can go down and test 27 or maybe 20 also. If market feels the value of current IT sector is at 30, 31, then it is going to stabilize. But if it says that I think the perceived value is 25 or 21, then I am going to go there. In the short term, things can fluctuate a lot, always remember, but you have to take a call. IT sector today, again, this is just an example of value. IT sector from the peak is down 40%, ITBs. And I would request you guys to do one thing. July 2024, October 2024, September and December 2024, open up YouTube and see what people were saying about IT sector here. At 42 times P of a particular IT company, which is one of the biggest IT companies, it was a buy rating. And today, that same company is being valued down. And September 2024 AI cycle was at a big swing. So what has changed? The same people or analysts who were giving a big time rating to IT sector in September 24 are now marking down that sector 40% lower. So I'm not questioning anybody's skill here. I'm telling you that at end of the day, you have to see what is currently trading at value, that is value that you perceive, and what you have to do about it. If you want to go with the trend, if you want to go with momentum, then your pockets are very clear. It is pharma, capital markets, health, small cap, then CPSC, EV theme, power theme, mid cap in general, infra sector, make in India theme, metals, commodities, defense. This is your space. If you're someone who is value oriented, then your focus has to be IT, it has to be private sector banks, it has to be some bit of FMCG, it has to be digital, it has to be tourism, hotels that have taken a hit recently, auto sector. All right, so this has to be the pocket. If you want to have a balanced approach, you can have best of both. I can tell you one thing: if the government is right in saying that our target is to make India Viksit Bharat by 2047, let's say some of you believe that vision, then do you think we are going to reach that particular level without banks and IT? That is the question you have to answer. Whatever India is going through in transition, in terms of transition, do you think it is going to happen without banks and technology? I am not at all bearish on technology when it comes to India. All right. The same death of IT stories was written in 2000, in 2010, 11. It is being written today also. It takes time for industries to adapt to certain things. We will be the largest users and beneficiary of artificial intelligence. Do not downplay the entrepreneurs here. We will catch up. We are late. Our systemic design is such. And I will also have to tell you one thing: it is the same system that has brought us to where we are today. I know there is a lot of problem, and I'm not defending the system as such. But look around where we are in terms of geography. There are a couple of countries, East and West, that got independence roughly during the same time where we got, especially one who got it on the same day or one day before. And then 20 years later, there is another country that got independence. Look at where those two countries are. Look at where we are. Guys, it is always about relative analysis. I am not comparing India with the US or Singapore. All right. By the way, in my opinion, India is better than the US. Anyway, I will get at negative comments about that. That is fine. But we are. My ideal country that I would like to see India becoming something like that would be Singapore, not the US or Europe or UK or whatever. So relatively see the same system that receives so much of criticism. I'm talking from 1947. Okay, so many governments, so many parties have come, have gone. But look at where India is today. Are we perfect? Far from perfect. But are we relatively better? Could we have gone into such a direction that you and I even talking about this would be so difficult? See, sometimes we don't appreciate the basic things that are there. All right. System for us, the tax paying people, is obviously something that we would like to see a lot of improvement. All right. We do feel that, I think I'm speaking for everyone here, we do feel that for the money we pay, we deserve a lot more, right? In terms of basic things that are missing in all of our cities. But still, I would tell you that when I look east, when I look west, and this is something Manish Chokhani also put it up beautifully. Had we been born towards the east side of India or west side of India, just imagine what your life would be. And that is a fact. Whoever wants to deny that and wants to write nonsense, they are more than welcome to do so. They are thankless bunch of people in this country. You just cannot do anything about such people, such negative minded people you cannot do. But the Indian growth story is here to stay irrespective of what happens. Our demographics currently for the next 20, 25 years is structured in such a way that India will grow. Whoever today is not looking at India, is shifting money out, is criticizing our growth story, they will regret. It is just the matter of time, nothing else. So if I were you, I would have a balance of value and growth both. That is obviously something that everyone has to look at. Also, I'll tell you one thing in terms of structure. Again, this is not a recommendation. If you look at the charts of gold bees and silver bees, again, you're seeing a volatile contraction currently in both. Silver bees is in a much better structure. This is a volatile contraction, but this contraction is valid. Price is sustaining about above 50 DMA. If you look at the US chart, it's much more cleaner. This is much more cleaner contraction that is currently going on. So silver still has to digest some bit of move, somewhere around this level. These are excellent structures, but it will take time. But these charts are also setting up again. So opportunities are there. So you can have a mix of value growth. Plus, if some of you do gold and silver, based on chart structures, you can look at it. If still some of you are not convinced, you want to take your money abroad and you want to park it in the US tech sector, that is fine. You can do it. There is nothing wrong in that. But again, compare the performance of the tech sector with some of our sectors that have worked currently, which repeatedly we have discussed: new age IPO companies, defense sector, capital market sector, and niche pharma companies. You will realize that a lot of companies and sectors have actually mirrored the growth of what Nasdaq has done. Yes, few percentage points here and there. So opportunities are there here. William O'Neill, Stan Weinstein, Mark Minervini, David Ryan have already taught you how to identify that opportunities. In the end, it comes down to homework. In the end, it comes down to how religiously you go through data over the weekend and then analyze the prospect and build conviction. At end of the day, charts will only take you to the place X, but from X to Z or wherever you want to go, it is the confidence and conviction that only preparation and homework can bring. You will always be scared of things you don't understand and don't know. That is nature of stock markets, and that is why preparation is so important. If you feel you will ever understand the AI sector or the US tech sector or the US economy that well that you can make a lot of money there, then fine. That is fine. That is your money, your decision. But in my own view, you will never ever understand any market better than your own market. Just be a little optimistic in nature, because in stock markets only optimists make money. For pessimists, there are thousands of data points that are put out on social media, on news channels. The same people who will criticize the Indian banking sector 1 week back, if the bank sector moves 20%, will come back and say, see, I was telling this point that this is going to happen. So conviction cannot be borrowed. Conviction is something you have to bring. And you have to ask yourself, if India has to go from X number to Z number, then can it do without banks? Can it do without technology? The answer is fairly simple. If you trust AI agents, those agents will help you understand these things better. All right. So growth versus value, you have to decide where your preference is. And if you don't understand stock picking, you don't have financial advisors, then the system itself has created so many ETFs for you that you can gradually deploy your money, have a long-term view, and benefit from whatever is happening in our country. All right. So take care, be safe, and have a great weekend ahead.